welcome to the Real Wealth Podcast, sponsored by Leading Edge Financial Planning, where we help people make wise financial decisions. And my name is Lyndon Zilke, and I am your host this week. But that doesn't mean Michael isn't here. Michael is here. He's actually the guest this week. So, Michael, welcome to the Real Wealth Podcast.
Wow, I am so honored to be invited on here and interviewed today.
Yeah, well, it's good to have you as a guest because I don't know if people know about you, how this firm was started and so on, but that and some other things are what we're going to talk about today. So I think where we'll start with this is let's start from the beginning. So I don't know how early the beginning is, but
I saw a little bit of light.
Okay. And that was the beginning, right?
That was the beginning.
Yeah. So you're from this area though, right?
Yep. I grew up in Goddard. I graduated from Goddard High. I went to K-State, spent some time in Florida for a summer, and then a summer in Indonesia and Thailand, and graduated with a finance degree. Came back to the Wichita area, was a West Sider for about 7 or 8 years, and then moved back to Goddard. And I've been there ever since, got a few kids, and currently on city council out there. But very, very involved in the community. And it's really been a pleasure to be able to serve and help out with some nonprofits here and there, and get into this industry, help some people out with their finances, and over the last 5.5 years, work on building the firm up.
So how did you decide to major in finance? Where did that come from?
I actually was going to college with the mindset of going to law school afterwards. And in the course of going to school, K-State doesn't have a super strong pre-law program. They just have it's more of a minor, and it's very easy to get that minor tacked on if you really want to. I don't think I actually even bothered with it because I didn't see a lot of value in it. But I did finance as a backup to go into law school because I figured, well, the world runs on money. Probably a pretty safe major to get.
Yeah.
To add on to be an attorney. But it was more of a corporate law finance. We did some things with individual securities. We actually managed at the time it was $1 million portfolio within the finance department of real money.
Really?
Yeah,
Wow.
We broke up into groups, and we made our stock pick, and we did our valuation and set our target price, and here's when to sell, and then the class voted on it. And I think we picked Nordstrom in like 2008 or 9 when it was down at like 11 or 12 bucks a share, and we said sell at 42. And I followed up with Dr. Higgins later, and after I'd graduated, and he said, actually, maybe they held it to 52 or 62, or maybe we said sell at 52. But basically, we
did go up.
We did really well on that one.
Oh wow,
we did really well, and that was a point of pride.
So at what point did you go, well, I don't want to go to law school, and I kind of like this finance thing?
Right. So when I was at K-State, I was really involved with the navigators, and a lot of that is they have a discipleship model of ministry where there's a lot of one-on-one, and I really like that format of getting to know people on a one-on-one basis. And with my finance degree, in a bonus year, had a few partial minors sprinkled into my education, a partial econ minor and partial Spanish minor, till I realized you can learn more Spanish just waiting tables at Los Patrios and get paid for it. Like, if I need Spanish, I guess I'll just learn it. But yeah, so I had a victory lap, and I was kind of ready to get out and work. And I figured I think I have a personality that would lead me to enjoy doing what this industry has to offer. I was also a little bit tired of schooling for the time, and I knew the odds of making it in this industry were very low. It's only about a 10%, maybe 10% rate of making it to 5 years in this industry. So 1 in 10. And that's across the board. That's counting career changers, those who are 45, 50, 60, moving over to this industry who have an established network of peers with money. And I'm a young college grad, just starting out with virtually zero street cred. And I figured I'd give it a shot, and it worked. And I did not go to law school.
Wow. I didn't realize it was that low of a percentage that made it.
Yeah, we're set up a little different here to where it doesn't quite work that way. But,
right. That's good.
Yeah, I've appreciated that.
So your first job then was where?
My first job was with Northwestern Mutual. Straight out, I went into the internship, and for the Wichita group, I think I was the only intern that made it. And we brought in probably 20 to maybe 30 interns a year, but I'm the only one that actually made it to that 5-year mark. And then after about 5.5 years,
only one.
Yeah.
Wow.
While I was there. And then after that stretch, I just realized that I felt like I was climbing a ladder at the wrong wall, and made another move. Went to a different broker dealer. I thought that things were going to be substantially different. They were, but there were similar problems that arose. And so I said, you know what, I'm going to start my own firm, because I'm bringing my clients along for this. These are people I care about, relationships I have, and I think I can do this different. And everything I'm being told at this point is, if you want to do it that way, you're going to have to do it on your own as an RIA. And so I went ahead and launched into it.
Mm-hmm. So you had your CFP at that point, though, right?
Yep. I got my CFP back, officially conferred in April of 2013.
Right. So about over 9 years ago then.
Yep. Coming up on 10 years.
Yeah. Wow.
Yep.
And so when you started this firm, you hadn't, that was about what, 5 years ago now?
5.5.
5.5. Okay. And it was your first venture out into knowing or starting your own business. How did that go?
Actually, it wasn't my first venture. It wasn't
your first. Okay.
I did a bit of that when I was in high school.
Oh.
And I figured out how to lose a fair amount of money as a kid. But well,
that's good.
But I learned through it.
Yeah.
In this industry, it was intimidating a little bit on how to set up a firm in a regulated industry. There's a lot of legal documents that go into it, figuring out disclosures, how you're going to operate. You're starting with a blank page pretty much. And then you got to get into what the regulatory stuff is. And you know what? I just went for it. It's just said, okay, we're going to knock it out. And that's what I did.
Did you have to think about it for a long time, or did you just jump?
I had been thinking about it. I didn't feel like I was quite ready until the follow-on experience trying to move firms, and then that didn't work out. The broker-dealer system is generally very large brands and established systems and ways of doing things, and you don't have a lot of control over what you actually do with your own brand or how you run things. And with an RIA, there's a lot more flexibility, and I think more accountability as well.
And I think that brings up, most people probably listening don't have any idea what RIA stands for, what a broker-dealer, and what's the difference between the two. And
right. So a registered investment advisory firm is what Leading Edge Financial Planning is. We're registered currently in Kansas and Colorado. And we're registered at the state level. We're not SEC. So we answer directly to the state of Kansas, where a broker dealer is a company that earns commissions for sales of securities. And that's essentially what they're in the business of doing, is selling securities. A lot of times an insurance company may be either affiliated or somehow connected to a broker dealer, and they sell insurance products and investments. And they may even have an RIA, a registered investment advisory component to the company where they're doing advisory work. They're earning fees off the investments instead of commission. So commission, you get paid more money. It's a higher dollar figure in a shorter period of time for a transaction, essentially. An advisory fee is, and I apologize for whoever might be boring on this, but the advisory fee is how our firm operates right now, for the most part, which is earning a percentage off of either an investment or earning fees for offering professional services and advice. So that's how we operate today. But even if you have the registered investment advisory component attached to a firm, that inherently attached to a broker dealer, there's an inherent change of the relationship there. And I know that there's a lot of hybrids out there trying to figure out how to operate in the best way with one foot in each side. But that's a challenge I just decided to avoid completely.
Yeah. So what is it you wanted to do that you couldn't do then when you were at a broker dealer?
I don't want to say I probably couldn't absolutely have done it. I probably could have figured out a place that would let me do it, but it was offering financial planning services as really the primary service. Today, the reality is most of our firm runs off of earning fees off investments, but we do offer to, and we have quite a few clients that come on and pay us a financial planning subscription fee. It's just kind of a monthly rate where whether they're starting out, they want to start with budgeting, they want to start with knocking debt down, they want to start with gaining some vision for what it's going to take to meet their financial goals and make wise financial decisions down the road. We can help them, even though there's not a substantial amount of money to invest for us to earn fees that are going to be able to cover our overhead and compensate us for helping them and assuming a certain amount of risk. So we've figured out a formula there, but that was going to be problematic, and it was proving to be problematic where I was trying to do that for. And also, we don't have restrictions on different types of investments other than, between us and the client, what we may impose. We're not trying to rep any particular company. We're not beholden to any investment company at all. We're not representing any particular insurance company when, if we broker insurance business on the side. So we're independent, totally independent.
So I can see there being a big advantage to a client but what if a client comes in and they go, I just want you to help me buy some funds. Can we buy funds for people?
We can, but and we'd have a conversation on maybe reframing why or learning why they want to buy those particular funds and see if that would fit into us being a great fit. There's always a possibility we're not a great fit, because if somebody wants, 7,000 shares of Textron and that's all they want, it may be the best fit for them just to go do that on their own in a brokerage account. But if they want us to help them really get down to the why, their personal why, their values, where they're headed, where they're going, how they interact with money, maybe how their spouse or their partner interacts with money with them, and figure out what is the best and brightest future we can help you guys attain with what you're doing to live the best life possible. That's where we add tons of value. And then taking that, applying that to our financial planning process, and with that, matching up investments, different types of accounts, and the things to get there in an efficient way that they're comfortable with once they understand what's going on.
So you talked about having the best life possible.
Yeah.
How much does that play into, I guess, your philosophy around helping clients, versus just trying to help build wealth for them?
Great question. It's easy to, I shouldn't say it's easy, but having money, having stuff, having things doesn't bring you joy. It's nice, maybe fun.
Maybe joy for a little bit.
Bit. It is fleeting. You made the comment, I think I'm going to sell my Cadillac, but it's a CTSV. So it's a very special type of Cadillac. It's basically a Cadillac and a Corvette, had a baby. So it's a lot of fun for me. I've loved that vehicle for like 9-10 years now, going on 10 years. And you're like, you shouldn't sell it. That brings you too much joy. But sometimes it's time to move things along to make room for what's next and something new. But yeah, I think that is one of the biggest ways we drive value when we're working with our clients is to get down to what do they care about, what gets them fired up, and what does living their best life possible look like, and start with that vision first and figure out how can we help them accomplish that? How can we help them to attain that? And that can be hard to do for yourself. Some people, it comes real natural, and they may have a vision, but they also may not know really technically or mechanically how to get there and how to put the things together, whether it's the investments themselves, how the accounts are structured, how do you build it up, how do you draw it down, how to match up what types of investments are going to fund the needs and the time horizons that they want them to fund, and even just how the markets work on what level of risk they may be taking on to put money into the market now to get it out at a future date, because they may not really know when they need it in the future. Could be short term, could be long term. And so we help them weigh out their options with that.
Right. So maybe a little bit about your philosophy around money. Maybe first of all, what was money like for you growing up?
Oh, money growing up worked from a fairly early age.
So you had a job early on.
Yeah, I'd worked for my grandpa.
Yeah.
First time I worked for my grandpa, he paid me like $3 an hour.
Wow.
Had us helping him do like pouring concrete, digging holes. So,
that's a good skill to have, though.
Yeah, it was hard work, and
seems like concrete's always heavy.
For some reason, it usually is. I think maybe there's some hybrid products out there these days, but for the most part, concrete or cement.
Cement, yeah.
We're gonna get blown up on our terminology here by well, there is some cement engineers or concrete engineers or whichever they are.
Right.
So, anyways, money growing up, it was, saved it up, and I made some really dumb decisions. I put in a stereo system and alarm in my 1993 Chevy Corsica that was worth way more than the car was, as a typical high school kid back in the day did. And of course, right.
Yep. Been there, done that.
I wish I would have had a little more guidance.
Yeah.
But I always negotiated too. I think I was about 10, and I bought this mountain bike at Toys R Us, but I chewed the manager down. My mom didn't know you could do that. I was like, there's a couple chips in the paint here.
Yeah.
I think it was originally listed for like $300, and I think I walked out of there for like $150 or something, but maybe $180. But I've always negotiated. I've always kind of had a mind for that, but for business and making money. But I wish I'd have had a little more guidance earlier on what's smart to spend money on, and thinking that through, because I did have a lot of toys for a kid that I bought myself. Remote control cars, other motorized things. It was a lot of fun, though.
What was your thoughts on, I guess, investing and finance when you were in high school? Most high schoolers don't have a lot. It really
wasn't on my radar.
Yeah.
I saved up some money. It really wasn't on my radar. I wish it would have been, because if I'd have been putting money away in high school, or at least a portion of that of investing it would have been worth quite a bit more today.
And so when did you first hear about what they call the eighth wonder, compound interest?
I think I did hear about it in high school.
Well, that's good. I sure didn't.
But I didn't have a practical way of
doing
of really doing anything with it.
Yeah.
It wasn't let's say it wasn't like a family hobby or anything.
So I guess going back to today, what sort of I guess goals do you have with where you want to take things, whether it's this firm or well, let's start with that.
You want to know about that first? Okay, yeah, that's fair enough. Where I see us continuing to go is to grow up advisors in this industry that have a strong set of values that include integrity and honesty, and they really want to help their clients figure out for them what living the best life possible is. And I know that phrase to me, when I first heard it, sound materialistic. It has, to me, it's not a materialistic statement. It's just a statement of fact of, okay, there is a best version of our life to be had. And with my faith background, that means, hey, what life has God outlined for me? Like, what's my purpose? How can I help? And so that ties back into the goal of the firm, because there are in every profession, people that are fine putting themselves ahead of their clients. And that is absolutely what I seek to not have happen at Leading Edge Financial Planning. I want our advisors to be full. I mean, we're full fiduciaries. We have systems in place to truly explore with the client great financial planning, help them understand how they interact with money, how them and their spouse interact with money, make decisions, talk it out, move things forward in a way that they're going to have peace about what they're doing with their finances, that they feel that they're making an informed and sophisticated decision, whether it's buying a car, buying a house, moving money around, preparing for retirement, mitigating risks in the future, such as the cost of extended care, whether that's self-funded or maybe an insurance policy does make sense in their situation, whether it's estate planning. So there's all these different areas that are easy, and frankly, you're incentivized to ignore a little bit if you're paid commission. But by doing the comprehensive planning, it's part of the scope of our work to help our clients understand these different areas to a level where they can go get the help they need to get the kind of outcomes that they really can have, and do it with some wisdom, do it with some grounded knowledge in their particular situation. And yeah, so I look forward to finding more guys like you and James and Jacob and Brian and continue to grow that and have a culture here that's rooted as it is today in personal growth, professional development, and accountability. And so I'm really excited for what we can do here. And I know, and there's other firms in town that I think share similar values, and we certainly have some cultural similarities. And I champion those advisors because it's not like us against the world. It's like, hey, I want to see, like, the main thing is I have professional pride, and I do want those that are in a position of advising around money to be acting on their client's best behalf, truly serving the clients, and not just out to be self-serving.
So is it the financial planning profession or the financial planning industry?
Good question. I don't know if we need to totally tackle that today.
Right.
At least today we have 3 CFPs here.
Right.
And I hope to have more in the future. So I don't know that CFP is officially claimed title to calling it a profession. It's a serious golden standard industry certification, that's for sure. But I don't know if it's necessarily in the realm of CPA yet. I hope the
Hopefully
CFP
someday,
board doesn't hunt me down and skewer me for saying that.
Right.
But I think that's what they're working towards, and I'm not really sure if they've attained that yet or not. But it seems to be on the cusp of that.
Yeah. I think the difference is whether or not you're trying to sell something or whether or not you're providing a service. And so that's historically where it's been, trying to sell things. Another question I have is about this podcast. It's called the Real Wealth Podcast, or Real Wealth Podcast. What is real wealth?
Great question. Again, on its surface, I think it sounds materialistic, but it actually wealth is very broad term, and like my friend Eric Neely has a podcast called The Wealthy Trucker, and he records while he drives, which I still don't. I mean, I guess he does. He totally records himself while he's driving down the highway. But it's a mindset. It's kind of like, even when you ask about the philosophy of money, Matt Lilly. There we go. I knew that didn't sound right. So Matt Lilly, I like his philosophy is really money's energy. It's a store of energy, and wealth brings in what you have, not just materially, but also relationally, emotionally, how fulfilled you are as a person. And so I think there is a natural inclusion of what your resources are, financially, physically, that part of wealth. But that's just one piece of the pie. Because if you're missing the rest of it, you're not wealthy. You may have money, but you may be totally bankrupt when it comes to emotion, quality of life, quality of relationship, meaning, purpose, faith. Yeah, there's a lot of components that play into that, and that's part of why we're able to cover the diverse topics we do, whether it comes to talking to a doctor, or actually we've had a few doctors on so far. Had a Brooke with the breath work. I think by this one will come out, that one will be out.
Right.
And then, but a lot of aspects we explore and shed light on how to live a more fulfilled life, take better care of yourself, maybe bring up some ideas you hadn't thought about before.
So what are you doing to, we say to have the best life possible with the time you have left?
Yeah.
And you have more time left than I do.
I hope so.
Statistically, not, we never know what's going to happen, but what are you doing to have the best life possible?
Yeah. Well, I try to take care of myself. I work out. I worked out this morning. And I'm trying to get a little more sleep than I had been. Or at least, if I go to bed earlier, I can get up earlier. That's natural connection. Be more aware and cognizant of how I spend my time and what I spend it on, and my energy as well. Got a great community of guys that I interact with. I've got some really great friends and mentors that speak into my life and that I let into my life at a deep level. I listen to a lot of books and podcasts. I do a lot of personal development, whether that's on, I listen to topics, everything from entrepreneurship to kind of deep stuff on therapy and what else do I listen to? So I do a lot of personal development. I guess I read a lot of books on spiritual type stuff. Go to church and have community through the church as well. Friendships, relationships. I do invest pretty heavily in those. I am spending time with my kids when they're with me. We do stuff. We hunt. We go to the dinosaur park down in Derby. We did all kinds of stuff this last summer. Had a great time together. So lots of family activity, and for me, the relationship side has taken on more meaning in my life than ever. And that is a skill that I've had to learn. that's something that I think I struggled with earlier on. And, but yeah, it's, there's a principle to, if you never received it, you can't give it or pass it on. And so it's been this constant effort on my end to some extent. And some of it is just, being blessed with great people that I've come in contact with, but finding great people that I can draw from, learn, receive what they have to give, and be able to grow personally and be open to that. And, being able to just be open about who I am and kind of go down the road together, rather than, I think it's easy to get walled up and just don't share, don't be you, and kind of wall the world off and accept it and hunker down and move forward.
Yeah, well, that was a good answer. I like that. It's, I think it's important to, I didn't hear you talk a lot about money. I think eventually money becomes just a part of what we need to do these things. It takes money, but money never is real wealth. And that's what I always get from listening to this podcast. So it's good to hear your answer to it.
Yeah, that didn't even cross my mind, actually, at all. I view money as a tool, as a resource. It's like, I got a lot of tools in my garage. You don't probably really care about that.
Yeah, it's the engine that...
It's a means,
It's a tool.
I am called to steward that, just like I steward this business and steward my relationships and my time and, time I have with my kids. But that's more of a stewardship matter. But actually living a wealthy, fulfilled life is so much more than counting the Benjamins, so to speak.
Yeah, Benjamins.
Or pennies. I don't know. Lincolns.
Yeah, Lincolns or Washingtons, whatever. Yeah.
Yeah.
Benjamins, though, I like those.
Yeah.
But, it's, some places don't take them anymore, so.
That's true. I guess. All right.
Anything else?
Anything else
that you want to add that I didn't ask?
Sure. You want to ask me generally how a client engagement might go?
Oh, sure. Yeah.
Now, not to pigeonhole exactly how it looks, because it's great that it can flex on the order we go about it in different ways, but when we do work with a client and we're helping them with their financial planning, we're always going to have an introductory meeting. Sometimes we get we're going to get more information from some than others in a first meeting, but usually it's a talk of get to know you. The person who might want to work with us is getting to know me or whoever else might be working with them, and we're getting to know them, trying to ask good questions, just connect, really understand what their values are, what their heart is, what they're trying to accomplish, and what their comfort levels are, what their past experience has been. But we get the beginnings of some information together. If they're already set on like, hey, let's move forward, let's do some business, we can engage at that point. Occasionally what we'll do is we'll put some of that information into our software, and then next meeting we can kind of flesh out and get a really rough view of what a financial plan would look like. Because when I was taught how to do a financial plan, studying for my CFP, it was like, here's how you do a financial plan. The reality is, in practice, you can have a very fuzzy financial plan or a fairly clear financial plan. What I mean by that is you may not have all the information, and I do my best to make the client aware that, hey, if we don't have this information, this is going to limit the advice we can give you, because we just can't manufacture. Like, if we don't know, we don't know, and they don't realize the amount of options and techniques we're able to use to help get their money to go further. The better our information is, the more we can give a more solid representation of what their options are, what their trade-offs are, how they can mitigate certain risks that could take down their whole plan. and how their money could potentially go further by just aligning it with how they intend to use it. Always, it's important to build in some buffer because invariably life doesn't go how we plan.
Oh boy. Yeah. Sure.
And yeah, but so we work on that. One thing that is nice to do at some point as we're clarifying what the goals and objectives are and how we're going to use, how we intend to use the money, is going through our return on life quiz that we do. It is a short little nice easy test that you always pass, and you can overlay a couple's answers with each other on. Actually, I don't know if they're overlaid, but I think they can be side by side. But we help to zero in on where is it in life that maybe isn't up to par with how you really want it to be, and let's explore that. Figure out how we can increase your quality of life. There's also the philosophy.
Right. That's the one you can overlay.
That's the one that overlays for a couple where you can see, okay, they're really not matched up on this area or these couple of areas, or one's really comfortable, the other's really uncomfortable in this area. Sometimes they just kind of flip around which direction they were moving in the slider. But sometimes, a lot of times, there's areas that just don't match up. Philosophically, they're on the opposite sides of the same coin, and they don't realize they're still on the same coin. And then we get to have a discussion on how to work through that, how can we find a way forward together in that area that makes sense, that they can kind of clear the air, they can get on the same page, even though they may still be on the opposite side of the same coin. At least find a compromise and find out a way that they can have some peace in planning and moving that forward. So that is really one of my favorite tools that we have, because it does such a good job of engaging what are your philosophy in these 10 different areas. And then of those 10 areas, how comfortable are you? Where are your pain points? And how can we help bring more peace to your finances in a tangible way today? And increase quality of life. So anymore, I do view our role as wearing the financial planner, financial advisor hat, but also wearing a life coach hat as well. Because
Definitely.
How we interact with money is very behaviorally based. Occasionally, I've recommended clients go talk to a counselor or therapist, because there are things that happen where we get traumatized, we have a bad experience. You know, I had a client where his wife just flat left, cleaned out the accounts piece, done, out, and she made more money than he did by a fair amount and moved to a totally different state, just gone. And so that's a tough one to get over.
Mm-hmm.
And I'm not equipped.
Wow.
I'm not equipped to handle all of that, but it's kind of like helping them help someone go talk to an estate planner or the right, maybe a CPA that'd be a good fit, or enrolled agent, or whatever the case is. But so we do help people get connected with other professionals that may be helpful for them, or at least encourage them to go find one. But yeah, how we interact with money is driven by a lot of factors. And sometimes there's stuff that we just haven't fully realized we haven't dealt with. And so sometimes, that's why I do view our role as we don't do therapy here, but it's therapy adjacent. It's at least in the ballpark in different ways. But obviously we don't have clinical training, so we are not therapists. We don't do that. We may encourage that for someone, but we do go more than just
some coaching,
risk tolerance.
Yeah,
a little bit of life coaching. Yeah. And then we follow up as needed. We kind of make a plan and we go for it. And occasionally clients get to a space where they're kind of on cruise control. Because we tackled all the stuff that needed to be tackled, and until a life change pops up, or, they're ready to start drawing money, or whatever the case is, whatever big change may pop up, that'll kind of drive it. But the nice thing is we have a level of understanding around their finances where we can offer advice, or we can model it out pretty quickly for them to help them understand what their decisions really are. and get to the bottom of helping them make a decision that they can have peace around.
It's like forecasting the weather.
The forecast. Well, but weathermen don't get paid on what temperature it is outside.
That's true. But you do have to redo it a lot.
Yeah, you do. You do have to keep revising the forecast. That's fair enough. Yep. That's right. That's right. How would that go in the world of weather if they got paid based on?
Well,
I don't know. Maybe they'd be okay with global warming.
Yeah.
I don't know.
I mean, the temperature has been going up a lot lately. So,
okay.
Yeah.
We digress.
Yeah, that's true.
Yeah. I've really appreciated having you guys here. You, Brian, Jacob, James, Dayton for 4.5 years. It's been a really awesome culture to have. And I know that as we talk openly amongst ourselves, and I know that like when you guys are getting with clients, you are being open and genuine, and I really appreciate that that's the culture we have here. That's I think it's pretty special and unique to have that level of comfort with one another. And nobody's in competition with each other. Egos don't really, I can't really recall a time that egos have gotten in the way. Maybe they pop up, but I think it's dealt with pretty quick if it does. And I really can't even recall a time. I can't think of any. I'm just saying that as kind of a blanket disclaimer.
Mm-hmm.
But no, I really love the culture that we have here, and I can't wait to continue to find more guys that are like y'all and women. So I don't want to leave that out.
Right. Guys can be generic, but
hims and hers. And
right.
Is guys.
Yeah. Yeah. But yeah. It has been good. I've enjoyed working here.
One other thing that I guess comes to mind is I think we have a bit of a different culture today on how we go about reaching out to prospects or developing relationships with people we might do business with, or and it can start off as a genuine friendship and then always transform into putting on the advisor hat when appropriate, and then going back to being friends when you're not advising. But
right.
I will put out kind of a blanket. I'm sorry to those that when I was really early on in my career, we were trained to sell in a certain way. And I know I was really aggressive because I was a high performer guy. And I mean, I worked my butt off. I worked a lot of hours, and I really pushed hard. And that's what it takes to make it when you're young in this industry. And I know I ran over some friendships along the way. So I don't know how many of those people might listen to the podcast, but give me a call. I'd love to apologize or even meet face to face for that. But I think that we've kind of come back around to just a far more natural relational way of helping and finding those that need help, and not trying to ram something down their throat they don't really need. Because I was so caught up in the culture of this is like the best thing for them, and it was kind of a prescriptive, paternal type culture. And then here's how you sell this to anybody. Everybody needs this. Here's how, and trust me, they're good at that. And I'm grateful for the training I received, because I received a lot of training specifically around insurance products and how to use those in more advanced ways. But that doesn't mean that everybody needs that, the whole life policies and all that. Occasionally it comes up where maybe it's a good idea, but always a lot of caution to be had along with that. But yeah, I just want to put out a blanket statement of, at the end of the day, relationships are far more important than the business end of things. Although I do want to help everybody that I know, and I do want to I do want to provide service to them and help them do better with what they've got in their stewardship endeavors of their money and their family and their leadership. That's the other thing that always kind of comes to mind for me is when I was in the Navigators, they said, if you ever want to know what's important to somebody, you look at their calendar and their checkbook.
Yeah.
I didn't want to be a scheduler for somebody. I didn't think there was probably a big career in that. But if I could work with people's checkbooks with their money and help them, that seemed like a great door to be able to affect the family unit. And yeah, because at the end of the day, when we get invited in to talk about money with families, that's very personal. Money touches everything. It touches family dynamics. It touches Thanksgivings that got awkward. I mean, like all that stuff is generally on the table and often talked about. And at least I know it is in my office. But we get close to our clients and yeah. So the relationship side is so much more important. But that's the bridge on which trust is built for the relationship is a long-term advisor.
Mm-hmm. Yeah. I know that one of the differences is we don't have any products to sell. But when we're talking to potential clients, we're really just applying for a job to work for them, in a sense, not really anything else than that. We're wanting to work for them.
Yeah.
And so we usually tell them that, we're here for them to help them make good financial decisions and give them the tools that they need to do that.
Right. Yeah. We use eMoney, and I think I guess I haven't surveyed it super recent, but as far as I know, eMoney is still the leader of the pack when it comes to sophisticated financial planning software. And even when you're a new advisor here, like you don't know how to really use that software. So let alone someone to go get it off the shelf online and try to do that. And, apply knowledge that you have to go poke around forever to learn. You got to learn to get your CFP.
Right.
So I'm just thrilled that we really do have the training, the people, the resources, the all the tools that we can use to help get down to what people care about, get down to their why, what their values are, where their levels of discomfort with money are, and help give them a path to remedy that, bring some peace to the situation, and put them in the driver's seat in understanding what their trade-offs are with their different financial decisions they're making, and provide clarity for them. So obviously we're not pulling up software and showing stuff today, but it's really great visual software to understand as complex as it is. If you do these things, here's how it'll probably affect your cash flow, lifetime portfolio value, your net tax impact. Here's how to shift things around and have just, more stable financial picture. But that's almost impossible to convey with just telling somebody. You've got to be able to show them on the software what's going on and why this works the way it does, and give them the option to say, I think that makes sense. Let's do that or not. And at the end of the day, it's we're working for the client, and we're there to support them. We're not here to shame them or tell them what to do or make them feel stupid or anything like that.
Right.
On that note,
Mike, thanks for sharing from your life and your experiences. And it's been good. I've learned a lot today, things that I even didn't know about you. And so I'm sure it'll be good for your clients and listeners of this podcast to also learn these things about the firm and about you. So thanks for taking this time.
All right. Thanks, Lennon. This felt like a walk in the park compared to trying to share how what a breathwork session felt like. All right. Thanks, Lennon.